It is beyond a doubt that all our knowledge begins with experience. Immanuel Kant. And my friends, your experience on learning how to chart the markets, how to track accurately price movement begins with your experience here each and every day, 10 to 15 minutes, following along with us, learning how to chart, learning how to follow price movement. Those of you who are devoting your time to watching the financial press, to paying attention to the little tidbits they supposedly give you between the commercials, I would urge you are wasting your time. Spend time in these charts, tracking price movement, learning how to divine the future from studying the past, and you will get so much more bang for your time. Now, let's jump into these charts. We see as things moved through the day, when I first tuned into the charts this morning, man, the S&P and the Nasdaq 100 were hammering down. They ended up the day up a little bit, a little less than 0.5% apiece. Bonds down, gold up, Bitcoin way down, 12.04% down on the New York Stock Exchange Bitcoin Index. And you know what I need to do while we are here is I need to go into my chart properties. I was actually preparing for you guys chapter 9 from the book, and I took this watermark of where the charts are, what charts we're looking at. I took that out, so I just put it back in. Those of you who follow along every day wonder, what is he charting on? Well, this is TC 2000. If you will look in your show notes, there's a $25 off coupon if you wish to go from freestockcharts.com to the paid TC 2000. When you get serious, that's the thing to do. You can get those live charts there too, which is extremely important. So let's jump into these charts. S&P 500. Big weekly down candle starting to form. It's a Heikin-Ashi candlestick. It's showing you where the average price movement is. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. 2-day chart. Same thing on the first day of this latest 2-day candle. You can see lots of downward pressure on the weekly and the 2-day. You can see where things were down in the morning, recovered some in the afternoon. Price percent oscillator flattened. Derivative oscillator lost some downward momentum, but still lots and lots of downward energy in this market. Nasdaq 100, very similar, down candle, down price percent oscillator, derivative oscillator on the weekly. Same on the 2-day. And again, you can see where things stopped and moved up a little bit towards the end of the day. Nonetheless, still lots and lots of downward pressure. Price still well below the weekly, the 2-day, and below the half-day. So still lots of downward pressure in the market. You can expect swings. Again, when we watch things move, they end up moving in, jerks typically. They go up, they slide sideways and down, they go up, slide sideways and down, go up, slide sideways and down. And then, of course, when the market dumps over, it'll go down for a while, it'll slide sideways, and it'll keep going. If indeed we're moving into bear territory and we keep these losses up, and we may very well have that being called by a lot of market operatives. What do we know and what do we care about? Well, we've been in the weekly vertical crossover territory for quite a while, haven't we? That's what we follow, and those 2-day recrosses that got us into this latest down move on the Nasdaq 100 and the S&P 500, that's all we care about, is accurately following price movement. I don't care what you want to call the market. I'm going to call it as I see it, and I'm going to let the charts lead me. I'm not going to worry about how I necessarily name anything. What do we see going on with bonds? Well, we had 2 weeks of nice down movement in bonds, particularly this last week, dropping to the most recent lower low. This week starting off with a doji, lots of indecision. Price percent oscillator, though, still heading down. Derivative oscillator heading down. We see as the day started off, of course, it is down 0.82%. Now we look at the latest candles, and again, our Heikin-Ashi candlestick is showing us average pace. You get a little bit better feel for that. We look at the half day here. We had a green spinning top before. We have a green open box top on the 2-day. Price percent oscillator a little less than flat. going down just a wee bit. It looks like derivative oscillator red losing downward momentum. What we see is where bonds bounded up in the morning and then bled some of that off, the opposite of what happened with stocks. Bonds pumped up in the morning and then dropped through the half-day trend line in the afternoon. Price percent oscillator flattening, derivative oscillator positive and flattening. So again, we'll watch and see how this market continues to move after Monday. What about gold? Up for the day, 0.55%. We see that we have a green up candle trying to form, not reaching a higher high yet. Price percent oscillator heading up, derivative oscillator heading up today. Again, a green candle smaller than last week. It's only the first day, so it's got more room to move. It is moving right up that 2-day trend line, well above the weekly. Little wick on top, not a big candle to get us super excited, but up for the day, over 0.5%, no less. And we see on the half day, we're just continuing to try to move up. A little bit of indecision in the morning, caught hold of a little bit of fire in the afternoon. Price percent oscillator, which had been flat, moved up a little bit. Derivative oscillator still losing upward momentum. So gold still has a push behind it on both the 2-day and the weekly. We talked about Bitcoin at the beginning, down 12.04%. On our New York Stock Exchange Bitcoin Index, look at that big red down candle. It's getting bigger. And the derivative oscillator, a little more than flat. It looks like it's got a little bit of extra length to it. That price percent oscillator, the ever most important indicator that we use. It's a percentage version of the moving average convergence divergence indicator, heading down. What about the 2-day? Spiking over, going down. Derivative oscillator gaining downward momentum. First day of the latest 2-day candle. A big red down candle, half day. Boom. Look at that. 4 big red down candles getting bigger as they go. So again, that is where we are on Bitcoin. Still lots of downward momentum there. We look at things like the Ethereum down for the day 3.74%. We look at the Bitcoin futures, and again, I'm looking at the half day for you. Let me go on the weekly there, and let me go on the 2-day there. You can see again that downward pressure on Ethereum, same thing. Now Ethereum in the morning down, recovering a little bit, not making it quite as bad in the afternoon. I think 3.74% is bad enough. We see Bitcoin down in the morning, gaining a little bit of that back in the afternoon, the Bitcoin futures. And then, of course, the overall crypto market down for the day, 15.16%. These are the top 10 cryptocurrencies. Those are weighted as per market capitalization, and boom, hammering down. And look at this first day of this weekly candle, just a hammering down. So lots and lots and lots of downward pressure on the crypto world. So again, I keep asking, if you are practice trading Bitcoin, why in the world are you in it just taking these losses? Don't quite understand it. It's gone from a high of, what was that, $63,000. We called the second week after that weekly vertical crossover going down, which of course would have been your last time to ever be in it. In fact, if you look at our charts, it would have taken you out on that 2-day crossover going down, what is that, 3 or 4 days after the top? And you would have had no reason to be in Bitcoin during all this period, and not sat there and lost from 68,000 or really around the $62,000, $63,000 mark, all the way down. What is the low? Oh man, pushing down to $34,000. Has it gone lower than that? I guess that's the lowest I see there. So again, no reason to take that beating. No reason at all if you can read a stock chart. Again, follow the charts with us each and every day. Practice trade. We're not a stock calling service. We're not a cryptocurrency calling service. We are not a bond calling service or a gold calling service. We're an education firm. I want you to practice with us. Learn how to do this. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.